Hello traders. So we're going to have a look at breakouts and breakout targets. So what you have in front of you is the Aussie, the South African top 40, but I'm on a 5-minute chart just so that I can show you the breakouts. It's a little bit easier to see them here in the 5-minute, but the same principle applies across all time frames. Okay, so I'm going to start with this one here. So we have a double top here. Okay, so those two pin bars there are the bottom of the range. You can actually say this Brooks gap here is on the range. Now bear in mind, this is never an exact science. Okay, so look for what looks the most logical, and you can see prices inside this range. Now a break to the upside would mean we would travel the height of this range. A break to the downside would mean we have a target equal to the height of the range. Now if you just look what's happening here with price action, we broke down with this bar. Okay, buyers stepped in to test the break. They came back and they tested the break, tested all the way back up to there. Okay, and then the retest was successful, and then the seller stepped in again. So there's kind of confirmation. So a lot of people will wait for the retest. So wait for this retest, there's the retest, and then get in on this trade. So this would have been a short trade, and your target would have been around here. Now always look to the left, and you'll see there's a couple of pin bars here. So price would be targeting this area. Alternatively, you just keep looking to the left to see what is there that can help you. Okay, now often it does shoot past, and that's okay. You know, so long as you're in the trade, you have your stop up above this retest bar here, and you're taking profit at a logical point. So logical points would be the bottom of this pin bar or the bottom of this pin bar. Okay, so that's one. Let's just see if we can find another one here. Okay, so here's another one here. So you can see down, some indecision, an engulfing candle, and then lots of tails. So again, we are in a range. Okay, here it is. We've had a breakout with this bar. We've come in, we've tested the breakout here, and the breakout is successful. Okay, so what would your target be on this? Your target is over there. Now you can use a trailing stop if you want to, just in case it does go beyond this. Or alternatively, just look to the left again. And where is the logical place? So there, look at the top of this pin bar. Okay, if you look here, there's a breakout retest. There was a breakout retest there, which we powered through. So the next logical place would be the top of this pin bar. So essentially, once you're going, you could move to a trailing stop and then take profit at the most logical point, which would be there. And very rarely would it be in the middle of nowhere. And if you look here, there's a Brooks gap here as well. And you can see this bar, there was profit taking on the Brooks gap. Okay, so a lot of times what I'll do is once I'm in a trade and it's running, I'll move my stop loss up to break even and then look for the most logical point. And that would be the first logical point, and there's the next logical point there. Okay, sometimes it's actually better just to take profit at the first logical point. It's less stressful, you've made your money, move on, wait for the next setup. Okay, so let's look for another one. Okay, so here is another one here. You can see price is behaving in this area, but look what happens here. We don't hit that target. Okay, now look to the left. What would be the most logical target there? Then you have another logical target here, and then the second part of that would be there. And that's exactly where price went to. Okay, So it's not to say that every breakout will be the height of the range, but often it does get to the height of the range. So when you combine this with the ichimoku, you will see you are below the cloud. So there is a possibility there. You can see the 100 EMA is also an area where you need to pay attention. Okay, and let's see if we can spot another one here. So here's a pretty big one, and this was happened on Monday. So we're going to do it from there, and we're going to line it up there. So basically what I'm doing is I'm looking where the most interaction is. So we've got 1, 2, 3, 4 tails at top there. Yes, we've got one that shot past. That's not really important to me. We've got one that shot past here. But more important, we've got 1, 2, 3, 4. So we've got multiple areas here that are interacting with this level. So multiple candles are interacting with this level. So that, to me, is more of a positive sign. Now we've broken through. So what I'm looking for is a retest. There's a retest, come back, but now we create a double bottom. Okay. Now this is going to get a bit messy, but bear with me. So now we have another range here. Okay. We had a bigger range breakout, which price is going to be heading to the downside, but now we've formed a smaller range here. So where is it going to? So copy that rectangle there, and we'll see we are sitting right in the middle here. Okay, but, and I've said this a couple of times, if you look at, let me just put the range tool on here, and there. Have a look where price gets to, the 50% height of the range. So often a retest of a range will extend to the 50%, which is why when you're playing a range break, your stop should always be above the range. Okay? For me, I will wait and see what's going on and watch this 50% area, because the minute you see this red engulfing here, that's your key to get in, and your stop is going to be here. So in this case, we're talking about a 60-point stop loss. Okay, and now what I'm looking for is I'm looking for the height of the range, which will be this dotted line, this red dotted line here. Okay, so you can see how price comes close to it, with the 100 EMA holds it up, and then it accelerates down with this pin bar, and the buyers step in right there on the range. Okay, so let's just delete all that, and let's just look at a different breakouts now. Okay, so here we have a wedge, right? Now a wedge is still technically it's still a range, okay? So there's a couple of things happening with this wedge. We've had a breakout to the bottom, which is, a lot of people look at it differently. Overthrows, it's a fake out, etc. For me, it's really, as I said before, I don't really pay attention to wedges as such, because if I look further, I will see that it's actually in a channel most of the time. There's typically always a channel at play somewhere along the line, and you can see here's a channel. And what I look for is, what's leading up to a channel break is a double bottom, or this is the double bottom here. I know it's not equal, but it's not an exact science. If you put Bollinger on this, you'll see that this is a Bollinger W reversal. In other words, this is touching Bollinger and this won't be touching Bollinger. And so a break of this level will give me a target to the upside. But often when you're talking about a range break, and a channel break, you are looking for the heights of where this channel started, which is there. Okay, so that would be the first one. Even if it was a wedge, you'd be looking for the heights of the wedge. And alternatively, what you're looking for is from here to where we hit the top of the range there. Okay, move that segment to there, and you see it's pretty much the same area. So where we get the first touch on the channel is normally the area that I look for taking profits. Okay, and so that's just, remember, when you've got channels, oops, sorry about that. So when you've got channels, your breakouts are typically always going to be, first stop will be the height of the channel, and then secondly will be any movement that we've had up into the channel. It will extend for the same distance. Okay, and I'll show you a clearer picture on a higher time frame, or something around that. Okay, so let's just go to a higher time frame and just see if we can find one. Okay, so let me just double check here. This looks like one, right? So here, yeah, pretty close. Okay, so let's just zoom in and have a look here. Okay, so basically we've had price go up and come down here. So now price has moved up to the upside for that distance. It has then come back in a channel. Okay, there's our channel. So it's come back in our channel here. So I'm looking for something that's going to tell me that we're going to turn and break out of the channel. And for me, that would have been here on the Ichimoku cloud, where you can see we're bouncing off there, and then this bar here formed a range. You can see long tail to top, long tail to bottom. That's a range. So if we break above this bar here, which we have, probability is we're going to extend. So what I'll normally do is I will put that range in. Okay, there it is. So we've broken. It stayed above the 50%, and now a break above this, the first target is going to be that level there, which is the height of the range, and that breaks the channel. So that gives me confidence that we're heading to the upside. And now if I take this and copy that segment and line it up with the bottom of the channel to see exactly where we're going, and you can see we closed there. We did extend past that, and the reason we extended past that because there were some players that were playing that area. So this was the previous breakout here. You can see there. The price came up, it ranged, and then broke out. So at the bottom of that range from there to there, and move that segment like that, and you'll see that we're pretty close to the target area up there. Okay, so for me, I'm always taking the latest move up. So I will discount this. It may still play out, but I typically discount it, and you'll probably find that there's a bigger play involving this range here. So what you can also do is use the Fibonacci expansion tool, and there it is there, and you'll see heading to the same area. Okay, so you're going to have multiple areas, and there's multiple people playing on different time frames, which is why you get the different targets like this. But breakouts, typically, if you're leading into a breakout like this, you're going to extend to the height of the lead in. Okay, so this is the lead in there. If I break above that, I'm going to extend to the upside, which is there, and you can see profit taking happening right there. Okay, so let's just delete all this. Okay, and the last thing I just want to show you is that I've customized my Fibonacci expansion. I just want to show you on white space where I have the top and bottom of the range as defined as the 0 and the 100. I have the 50% of that range defined, and then I have the 38.2 extension of this range, the 100% extension of this range, and then the 161% extension of this range undefined. So I know it says 261 there, but simple maths, we're at 100% here, so I need to add 38 to that to become 138. I need to add 100% the range, so it becomes 200. I need to add 161% of this range to the range height, so it becomes 261. On the other side, it's just a negative. Okay, so that is my range tool. So if you can configure your one of your Fibonacci extensions, luckily with Flowchart I've got two that I can use. I've got one there and one there that I can use. So the one is configured like this, and the other one is pretty much a standard Fibonacci extension. And, I will do a detailed video on that as well, just on the Fibonacci, to show you how important that is. As you can see, that's my normal Fibonacci that I utilize. Anyway, guys, so that's a quick view on breakouts. And obviously there are multiple patterns. So, for example, here is a head and shoulders. So there's the left shoulder, there's the right shoulder, there's the head, and then the right shoulder is here. So if I just draw a line across there, okay, so there's the shoulder, there's the head, there's the shoulder. So that is a range, a breakout of that. Where is it going to? That's the area it's going to. And you can see profit taking started there, and then we had a breakout of this range. Okay, so if your target area lines up with something on the left, take your profits. Don't sit and wait for it to come up. It may come all the way back down, and then only move to your next target area. So it will give you another area to get in. So always be conservative on your targets, and this way you can actually put the trade in, put your stop in, put your take profit limit in, and you can carry on with life. It should get hit if you're conservative and you have a confirmation. For example, here we had a breakout and then a retest, a double retest of this breakout, which is a good confirmation. After this, I mean, if you've got in on this and had your stop below the right shoulder, as soon as this happens, you can move your stop right up to break even and let it run and take profit at the heights of the range. Okay, so always be conservative in your targets. Take the first target, bank your profit, and either bank everything or just build yourself a strategy that says you bank some of it and let another one or two contracts run for any further gains that there may be. So I hope that helps, guys. Remember, be conservative and pay attention to those breakups. They're actually pretty important. When they do break out, it does generate you substantial profits as well. But I hope it helps. Catch you later.